is supposed to make us forget about gas fees and chain meltdowns. And hackers are now vibe hacking with AI, basically turning ransomware into a Costco subscription paid in Bitcoin. All that and more right now on today's show. Let's go. Good morning, everyone, and welcome back to another episode of the Blockchain Report, your daily reminder that the financial system is broken, but at least we can laugh about it on YouTube, X, or Rumble, whatever, whichever one you're watching us from. I'm Hank Hudson reporting live from the Bay Area, where tech bros treat pickleball matches like board meetings, and disruption usually just means firing customer support and replacing them with a robot. Yes, thank the good Lord Satoshi, it is Friday, that special day of the week where you dream of Netflix and chill, but end up with CoinGecko and anxiety. Now, before we cannonball into today's Bitcoin carnival, let's handle the basics and punch that like button like it just said something about your mama, and follow Roxom TV and yours truly at Hank at Roxom TV on every place you choose to ignore reality. All right, though, enough foreplay here. Time to see who's swimming with the whales and who's drowning and who's praying for their stop loss wasn't set too tight in this morning's market rundown. Let's go. All right, so let's see what's going on this morning in our market rundown. Bitcoin has fallen quite a bit. Is crypto and Bitcoin over? No, I don't think so, but currently we are sitting above that 108K mark. We saw 124 highs about 2 weeks ago, a week and a half ago, but we have come back considerably, but I think we should be fine. Everything's gonna be fine. Ethereum currently sitting just beneath that $4,300 mark, and Solana down almost 3% this morning, currently sitting at 209. All right, we're going to take a quick break, but when we're back, we're going to be joined for our bull run by today's special guest, BRIAN DIXON from Off the Chain Capital. Stay tuned. More Blockchain Report right after this. Welcome back. It's time for this morning's bull run where we go over the top stories of the day. And joining us this morning for our bull run is a special guest. Now, this gentleman has been in the digital asset trenches since before your Uber driver started pitching you altcoins. He's a four-time author, a global keynote speaker, and now the CEO of Off the Chain Capital, a firm bringing Warren Buffett-style investing discipline to the Wild West of crypto. He's been featured everywhere from CNBC to Forbes to Blockworks and has helped scale more startups than I've rage quit Discord servers. So let's give a big Blockchain Report welcome to the show to the one and only BRIAN DIXON, everybody. BRIAN, welcome to the show. We're certainly happy to have you here, and so is our audience. How are you this morning?
Thanks so much for having me. I appreciate it.
Yeah, no, the pleasure is all ours. BRIAN, before we jump into today's top news, for those in our audience that may not be familiar with you yet or Off the Chain Capital, can you just give us the quick version of who you are and what you're working on these days?
Of course. So Off the Chain Capital is a Warren Buffett, Benjamin Graham Dodd style discount value investor in the blockchain space. So very simply, what we look to do is try to find unique ways where we can acquire a dollar's worth of blockchain assets for 50 cents, or ways that we can acquire a digital asset or a blockchain asset at the spot price with the ability to sell it at a premium. And our investment universe is really split between two core themes. One is private equity, and the other is what we characterize as mispriced digital assets. So as an example, on the private equity front, some of the holdings that off-the-chain capital has would be businesses like Kraken, BitPay, Polychain Capital, businesses like that on the private side. And then on the liquid side, we've started to allocate a lot more into different types of Bitcoin treasury companies and other digital asset treasury companies over the last 6 months, and really, pour capital into that space because we think it has a lot of opportunity. The firm's been around since 2016 is when we founded it. I got involved in Bitcoin in 2012 when I was finishing up law school. Like you noted in the introduction, I did build a venture capital business before that where I funded over 100 startups across technology and consumer products and energy technology, and was sourcing them for the federal government's NGA, National Geospatial Intelligence Agency as well, which is like the arbiter of satellite imagery in the United States. Was very fortunate to get involved in the Bitcoin and digital asset space very early, and then turn that passion into something where we've built off the chain over time.
Amazing. Well, we're going to get into off the chain in just a bit, but we've got some big news to cover this morning. So you ready to rock and roll?
Let's do it.
Okay, so first up, we got Eric Trump. He has gone international at Hong Kong's Bitcoin Asia 2025 conference. He declared with zero hesitation that Bitcoin's going to $1 million. Not maybe, not if the Fed behaves, just flat out, no question, it's heading there. Take a look for yourself. Let's roll the clip, guys.
That's why I've always said that I really believe in the next several years Bitcoin hits $1 million. There's no question Bitcoin hits $1 million. And when you're in the room with certain people, and I had breakfast this morning with a couple of the most powerful people in the region in the hospitality space, and you're literally sitting there trying to explain to them what digital currency is, you realize how early we all are to this race and how big of a benefit that is, right? I hear from people all the time, should I get into cryptocurrency? Did I miss it? Am I too late? And I literally start laughing at them. I go, we haven't even scratched the surface of what Bitcoin is going to be. We haven't even scratched the surface of what digital assets are going to be.
So according to Eric, 90% of his time is now spent in crypto, which is either dedication or the world's longest attempt at avoiding real estate paperwork. He used the moment to praise the CEO of Japan's Bitcoin treasury giant Metaplanet, a company Eric conveniently joined as a board advisor earlier this year. Subtle. The Trumps, of course, are all in. Eric and Don Jr. co-founded American Bitcoin. They help run World Liberty Financial, and they're now expanding east. Hong Kong today, Japan tomorrow, South Korea and Singapore in September. It's like a boy band tour, except instead of albums, they're dropping Bitcoin predictions and meme coins. Even Donald Trump himself, once a crypto skeptic, now calls himself the first crypto president, dipping his own toes into the treasure industry, World Liberty Financial, meme coins, even a stable coin called USD1. Naturally, critics are screaming conflict of interest, but this is Washington, and conflicts of interest are a feature, not a bug. Still, not everyone in Asia rolled out the red carpet. A Hong Kong regulator and a lawmaker both pulled out of Bitcoin Asia's conference after being told not to engage with Eric Trump. Let's just say the optics of hanging out with the president's son during a trade war aren't exactly career enhancing. So here we are. The Trump family is building its crypto empire on U.S. policy at home and photo ops abroad. Bitcoin's the headliner, Asia is the new stage, and Eric Trump is out here promising $1 million coin like he's promoting the grand prize of the next season of The Apprentice. All right, we're bringing Brian back. Brian, Eric Trump just walked into Hong Kong and declared with no hesitation Bitcoin's going to $1 million. When you hear that, do you roll your eyes, do you nod in agreement, or do you start buying more? What do you take from it?
I mean, I agree with his statement. Bitcoin, in my opinion, will go to $1 million. It's just a matter of when. And I think if we look at the macroeconomic landscape around the world of the excessive printing, along with other government policies, it's probably going to happen sooner than later. So I think he, in his statement, noted it would happen over the next couple years. I think it is possible it could happen over the next couple years. And as we see more and more adoption, not only from the traditional crypto market, but as it expands to other markets around the world, I think that's going to accelerate adoption. And one of the ways that we're seeing that today is through the on-ramps of these Bitcoin treasury companies. So if we look historically at MicroStrategy, so MicroStrategy was really the pioneer behind developing a Bitcoin-only treasury strategy. And in 2020, his team started accumulating Bitcoin, and they basically grew from a $600 million company to over a $100 billion company over the last 4.5 years with this particular strategy. Now we're having all these new entrants in all these jurisdictions around the world that are doing similar things where they're going public or merging with an existing public company with the goal to acquire Bitcoin for their balance sheet as part of a long-term treasury reserve strategy. Now, why this is so important in terms of the long-term adoption of Bitcoin is if we look at the global cryptocurrency market today, it's probably between $3.5 to $4 trillion, right? A big chunk of that is Bitcoin, the majority of it. So when we think about that market, that was kind of developed organically over time, largely driven by the retail investors in the early days. The institutions didn't actually start picking up the space until just recently. But there's a huge pool of capital that was never, ever entered into the cryptocurrency market on both the institutional side, more of the traditional asset management side, because they didn't want to go through the regulation or custody risks by doing it. But what can they do? They can buy public equity and they can buy public debt. And that's what's happening with these Bitcoin treasury companies, because as these as these companies enter the market, it's going to allow this massive pool of capital that's never touched the space to start getting exposure to the space via an on-ramp that's regulated that they're familiar with.
Mm-hmm. And with the Bitcoin treasury companies that we've been seeing kind of grow pretty rapidly in this most recent year, are you concerned at all about the recent downturn we've seen in Bitcoin's price? You know, not every company is equipped to weather the storms, like a MicroStrategy, for instance, or strategy now that has a cost basis of like 73K a coin. But now that we saw a lot of people seemingly entering at the top, we've seen a bit of a drawback. How do you think this is going to play out in the near future?
Yeah, so my opinion on this is that not all Bitcoin treasury companies are going to make it. You know, not every company in a particular market is going to make it. There's going to be competition. I think that in the short term, so maybe that's the next 6 to 12 months, we could see a lot of performance opportunities out of these types of businesses. And then if there's a more significant drawdown, like we've always seen in the Bitcoin and digital asset space, then we can see a lot of these companies, maybe they have to start selling their Bitcoin to buy their shares back in the open market to balance their MNAV. Now, what the MNAV is basically the premium the company is trading at over its Bitcoin balance. And that could create an accelerated drawdown of Bitcoin's price. And then some of these companies may not make it in a situation like that. And we may see some acquisitions or some consolidations or just some flat out bankruptcies because they don't make it. But I think long term, if we stretch out past that, so I think they have the potential to do well in the short term. In the medium term, maybe they draw back and we could see some of the issues that I just noted. But long term, it's my belief that the largest Bitcoin treasury company in each jurisdiction around the world becomes the future of a Bitcoin denominated central bank. And Strategy sits at the top of that stack as the largest Bitcoin treasury company in the world. And then I think it trickles down as like derivative branches to all these other ones in different jurisdictions.
Yeah, no, I think I would agree with you on that. I think it's also really going to depend on like who are the stewards of these different Bitcoin treasury companies and who have these strategies that are looking toward the future in spite of some of these more recent pullbacks that we're seeing and likely will see if, you know, the history of Bitcoin is any indication. Another thing I wanted to chat about was the Trumps. They're taking their Bitcoin show on the road now through Asia. They're going Hong Kong, Japan, South Korea, Singapore. In your opinion, does this global push help Bitcoin's credibility in Asia, or does it risk making Bitcoin kind of look like a family franchise instead of a neutral global asset?
Well, I think the most important thing to remember is that Bitcoin has grown significantly on its own before this ever started occurring. And Bitcoin doesn't need an evangelist to go and, you know, broadcast it from that perspective. It's already organically grown tremendously to trillions of dollars in value all on its own. So anything on top of that, I think, in my opinion, is largely just going to enhance credibility and adoption. And when you think about the Trump family, if you think about Trump's last term when he was in office, he was actually negative to neutral on Bitcoin at the time. Then during the Biden administration, unfortunately, a lot of the regulators were weaponized towards the cryptocurrency industry. And when that happened, not only the cryptocurrency industry, but also specific other use cases, and one of them was the Trump family. So Eric Trump has spoken publicly about this many times, is they got a phone call one night, and about 300 of their bank accounts, everything from Citigroup to JP Morgan to all these different ones, were basically just turned off overnight. And they had to scramble to get these new bank accounts set up so they could facilitate and continue business operations. So if the regulators or the banking system has the ability to do it to a family such as the Trumps, it could really happen to anybody. And I think what they woke up to during that time is, if we can get cut off, this could happen to anybody around the world, but what's the solution for something like this? And that's when they started to become much more open to Bitcoin in the digital asset landscape, in that you can transfer value online around the internet without the need for a bank or a third party. And that's incredibly powerful to be able to basically remove that power from the prudential banking regulators and the banking system and put that in the hands of the individuals that can move that value. And that was, I think, their big light bulb moment. And so from that point, they've just continued to aggressively educate themselves, build products in the space, and get exposure to different assets in the space. And I think the more they get into it, the more they learn how powerful it is. And not only how powerful the technology is in terms of solving these important use cases, but how powerful the community is in the Bitcoin and digital asset space. Because this is a community of people that basically figured something out before the institutions or before Wall Street or some of these bigger organizations. And they built this on their own over time across all different areas of the landscape. And that momentum is not going to stop. It's just getting bigger and bigger, like a snowball running down the hill. And so when you have that much power in a community, you can really make amazing things happen.
Yeah, no, that's a really good point. So maybe it's like we're kind of looking at it the wrong way. Some people are looking at it, oh, this is like the kind of Trump sideshow, and really they're serving more of as an example of like how you can escape from the shackles of traditional banking, and there are other opportunities out there in the Bitcoin space. Seemingly is very much one of those. So well put. Hang tight there, Brian. We're going to go right back to you in a sec. We're going to talk about this next story, and I'm definitely going to want to bring you in to chat about this one because Kindly MD is going full Michael Saylor. The company filed a $5 billion automatic shelf registration with the SEC, giving them the ability to issue basically any type of security Wall Street can dream up. Common stock, preferred stock, debt, warrants, rights, or Frankenstein units, you know. And the point of this financial buffet, well, use the proceeds to buy more Bitcoin. Yes, the company formally adapted a Treasury reserve policy, naming Bitcoin as its primary reserve asset. Corporate mission statement, HODL until further notice. Now, the filing does mention general corporate purposes like paying debt, acquisitions, and working capital. But make no mistake, the first bullet point is expand the Bitcoin treasury. Now, Kindly MD isn't new to this game. Earlier this year, they raised more than $500 million in private placements specifically for Bitcoin. They issued a $200 million convertible debenture secured by Bitcoin valued at no less than $400 million. And then last week, they casually added around 5,700 Bitcoin in one go. That brought their total to around 5,765 BTC. Now, with this $5 billion shelf, they basically set up an unlimited line of credit to keep buying dips and even leverage existing holdings to finance further acquisitions. All right, we're bringing Brian back. Brian, Kindly MD just filed a $5 billion shelf registration with the SEC, basically giving themselves a whole buffet of securities to keep buying Bitcoin with. What does this tell you about where corporate treasuries are headed right now after seeing them do this?
Yeah, so full disclosure, Off the Chain was an investor in the Kindly MD Nakamoto transaction. I've known that team for many, many years, over a decade. I'm really happy about what they're doing and what they're growing. And I think what's occurring here is they want to basically take the existing businesses that they've built so successfully over time, which is the Bitcoin conference and their asset management company, UTXO, merging those together, bringing that to the public markets, and then acquiring more Bitcoin using the strategy, and then continuing to grow that Bitcoin stash over time. In addition to that, one of their core goals is that they want to launch 80 Bitcoin treasury companies in the 80 largest capital markets around the world. And this goes back to the point I made earlier where if this proves out to be successful long term, it's possible that these become the Bitcoin denominated central banks, like the largest ones in each of these jurisdictions. And Nakamoto has a goal of launching those and have exposure to them. And they've really developed a unique playbook of how to do that, how to create community in each particular jurisdiction via their conference and other types of media outlets that they've built over time. And I think them issuing the shelf registration to the SEC is basically just signaling to the market and opening the avenue where they can issue debt and equity into the future to then leverage that fiat capital that comes into the company to then convert that over to Bitcoin to carry out their plan long term.
And Brian, a $5 billion shelf would seemingly give them a lot of flexibility. But do you think this level of financial engineering around Bitcoin is a good thing? Or does it maybe, I don't know, like risk introducing too much Wall Street leverage into Satoshi's simple money system?
Yeah, so there's risks with everything, right? Like before we even started seeing Bitcoin treasury companies en masse like we do today, if you go back to the last bear cycle, just the traditional private market of a lot of these companies, we saw massive bankruptcies and over-leveraged businesses with no sustainable business models. And when the price drew down, it blew the companies up. And we had a flurry of bankruptcies. And then we had the FTX situation happen, of course, too, which was just terrible fraud in the industry. And so risk can happen whether these companies are public or not. So I think what's actually occurring is that when they do this and they're entering the larger capital market, it's going to accelerate the ability for larger pools of capital to enter the space and get exposure. And what we've learned historically is when you have larger pools of capital enter the space and better regulatory policy, which is also entering the cryptocurrency space as well, it creates a maturation of the industry, right? Like things get much more mature over time and people get more protected from a consumer protection, investor protection standpoint. And then also the products and services expand. So I think it's possible if you really read the shelf with what Kindly MD has done, some of this capital could even go towards acquisitions. So I think long term, we could start to see some of these Bitcoin treasury companies not only acquire Bitcoin for their balance sheet, but maybe acquire and or build out a suite of Bitcoin related service providers or product providers that they can then issue to the market as well to generate more revenue for the public entity.
Interesting. Well, you're the right guy to talk about it. Now I want to talk about your company, Off the Chain Capital, in our deep dive. So guys, can we run the stinger? There we go. There it is. Beautiful. All right, Brian, so before we officially get into Off the Chain, I want to rewind just a little bit and ask, like, how does a guy like you go from law school and then running operations at a personal injury firm to becoming one of Bitcoin's earliest adopters? Can you kind of bring us through that really quick, because it's such an interesting background?
Yeah, for sure. So I learned about Bitcoin by accident. So like I noted, I was finishing up law school when I learned about it. This was in 2012. And I was in a wills, trust, and estates type class, and the content was rather dry, as you can imagine. And so I wasn't really paying attention to what was going on in class, and I was surfing the internet. And I came across an article about a new pharmaceutical drug that the military was giving F-15 fighter pilots to allow them to fly extended missions with no food or drink. So, I mean, basically, it's probably like turbocharged Adderall. It's kind of like what they were giving him, I would assume. But in the footnotes or in the comment section of the article, somebody goes, "Where do you buy this at?" And then the next comment said, "You have to send Bitcoin to the manufacturer in Mumbai, India." And the person said, "What's Bitcoin?" And then the next comment was, "Read this." And it was Satoshi's white paper. And, you know, I had no interest in the thing. I was like, what is Bitcoin? I never heard of this. So I clicked the link and I read the white paper while I'm sitting in class. And I had no technology background at the time. Like I was always fascinated by technology, but I didn't have any computer science training or anything like that. So I read the white paper, and I've always been very into like trying to understand what do I think is going on in the world behind the scenes from what we see all the time. And I've always thought the monetary system was such a huge scam in that it's a private corporation that has its own governance and board and works in tandem with the government, but the government doesn't actually control it. And I always thought that was like a huge scam operation, that if there's a famous quote that back in the day that said, if most people understood how our monetary system worked, we would have a revolution by tomorrow morning. And most people don't, because they're just asleep at the wheel. They don't know what's going on. They spend money every day, but they don't ever spend the time to understand what money is. And so when I read the white paper, and then I went home that night and I read it a couple more times, and I probably read it 20, 30 times over the course of a week. It just kept drawing me back for some reason. My first light bulb moment with Bitcoin was not actually the technology, because I didn't understand it yet at that point. It was the philosophical shift, whereby I thought, if this works, we're going to be able to shift and fundamentally break money from state, like we separated religion and state many, many years ago. And that was the big light bulb moment for me, that if this works and this catches on, separating money through a system of arithmetic and mathematics that we know exactly how it's made, from a group of 12 men standing around a table basically deciding what monetary policy is, that's a much more fair system. It's a much more predictable and fair system, and it can't be diluted over time. So I got very fascinated in it. And so post law school, I joined and built an early stage, venture capital and startup company where we were doing venture investments and raising venture funds. And we also built an accelerator program. And as I was building that company, I was still very involved in the Bitcoin community. So I'm originally from St. Louis, Missouri. And at that time, there was very, very few people I had come across that had ever even heard of this before. But there was a small group of Bitcoin meetups. So I started going to those Bitcoin meetups, and then my relationships in the space expanded from there. And then funny enough, I actually met Nakamoto CEO David Bailey and his team years and years ago, probably like 2013, because they came and did a conference at my law school at the time when I was finishing up. It was called Distributed Consensus before they rebranded as the Bitcoin Conference many years later. And so that's where I first met those guys and got to develop a relationship with them. And then over time, I just continued to learn as much as I could, educate as much as educate myself as much as I could, excuse me, and get exposure to the space. And then as new things continued to grow and get developed, I continued to build relationships. And then ultimately, years later, Off the Chain Capital was launched, and we grew that over time. And that's what we spend our time on today with this Warren Buffett strategy that's worked really well for us.
Yeah, boy, that really came full circle. So meeting David Bailey back in 2013, then working with him and Nakamoto, that's wild. And then, yeah, you mentioned Off the Chain and your Warren Buffett style approach. Tell us a little bit about that. Like, what's the elevator pitch for that, and what makes it different than other strategies that are out there currently?
Sure. So I like to start off and talk about what we don't do to paint and illustrate what we do, because I think that's helpful. A lot of the crypto funds that exist today are doing a few things. They're doing venture capital investments where they're investing in the early stage company or early stage token protocol, which is not what we do. There's like traditional private equity funds where they're leading rounds for these larger companies in the crypto space. There's crypto fund of funds where people invest in one fund and then they allocate to a series of investment managers in the crypto space. And then there's a lot of quantitative trading type strategies. So we don't do any of those. What our strategy is, and we built this very early on, and I think it helped us develop a really interesting moat in the space from a competitive advantage, because still after all these years, we really have yet to come across another firm that does exactly what we do. There's components of it where we've had competition on it, but in terms of a whole for our strategy, we still have yet to come anywhere around the world that we found anybody that basically does specifically what we do. And what it is we're just trying to find opportunities to acquire assets at a discount to their intrinsic value. And the benefit of that is if you can buy an asset that's worth $1 and you can get it for 50 cents, not only did you just build in 50 cents of a profit margin, if the asset continues to perform on top of that, that's just icing on the cake in terms of the return profile. And I'll use a great example of the big light bulb moment for us that really helped this strategy work early on. Many years ago, in 2014, there was a Bitcoin exchange based in Japan called Mt. Gox. Mt. Gox at the time was the largest Bitcoin custodian in the world. The exchange was hacked. 850,000 Bitcoin were stolen. They were able to recover 141,000 Bitcoin, and they went through a bankruptcy proceeding in Japan. So our goal as a fund is to outperform Bitcoin after fees. And so it's very challenging to do that. We look at Bitcoin as the hurdle rate. And because we think if you can't outperform Bitcoin over time, you're better off just owning Bitcoin. So we try to find ways where we can acquire Bitcoin at a discount or acquire other assets at a significant discount that we think are undervalued that will contribute to the opportunity to outperform Bitcoin with the portfolio. And the Mt. Gox situation was a great opportunity because what we learned is in Japanese bankruptcy law, if you buy a bankruptcy claim, when the bankruptcy concludes, they pay out the liquid asset as opposed to the cash value. Whereas in United States bankruptcy law, generally, when a bankruptcy is filed, the assets that were liquid, their cash value is struck at the point of the bankruptcy filing, and they don't increase or decrease after that. Like that's the amount. And so in Japan, what we learned is that if we could buy these bankruptcy claims at a big discount, not only were we getting a discount on the claim value and Bitcoin's current price, we were getting Bitcoin's future performance. And we were such huge believers in Bitcoin that we thought if this worked, with Bitcoin probably going to become the best performing asset in the years to come, was our thesis, there could be great opportunity there. So in the early days of us doing this will sound a little bit crazy, but we were buying Bitcoin for free. And what I mean by that is inside one of these bankruptcy claims, there was 0.18 Bitcoin, 0.18 Bitcoin cash, and $700 in currency. And we were buying each claim for $500 a piece. So we were getting the Bitcoin and the Bitcoin Cash basically free of charge when you think about it. And so that was just an amazing opportunity for us. And then in 2024, the bankruptcy concluded, and the trustee managing the bankruptcy process, they paid out that liquid Bitcoin. So we then received that liquid Bitcoin that we had been building a position over for many years. So that's an example of something that we've done over time. We take the same strategies and apply it to private equity, buying assets from early employees or seed investors that want liquidity, and we'll go in and offer them that liquidity at a discount. And then on the liquid side of what we do today, we have big investments in the Bitcoin treasury companies and digital asset treasury companies as well.
Interesting play on that. I appreciate breaking that down for us. Right now, are there any like companies that you're looking at, or example of companies you're looking at currently that you think are undervalued in today's market that maybe people are sleeping on right now? Are you able to share anything like that with us?
Yeah, one particular asset, and full disclosure, we do have exposure to this as well. And I look at more of the protocol as opposed to the asset that we've looked at for many, many years that I think is undervalued is BNB. BNB associated with the Binance protocol. I think that's a particularly undervalued asset that not enough people understand. And when you really look at BNB from its token economics model, I think it's probably the best token economics model after Bitcoin, because the organization takes a percentage of its free cash flow and goes into the market every quarter and acquires BNB and then burns it and destroys it. So they actually reduce the float of the token over time, which basically creates this deflationary mechanism that long term can create a lot of value for the token. And so I actually think that's one to really take a look at and understand, because I think it's an undervalued asset where it sits today.
Interesting. I'll have to do some more homework on BNB, it sounds like. In terms of like your general clientele, like who is your typical investor today? Is it family offices, endowments, retail folks, a little bit of everyone, or who do you normally feel like you're serving as clients?
Yeah, so most of our investors tend to be family offices and institutions. So I would say, 95, 97% of our client base falls into the family office category. And I think the reason that is because these are people who have accumulated success in different ways, and they started to see the opportunity a lot faster than an institution was able to due to their own due diligence mandates and custody and regulatory requirements. So family offices, we got a great foothold with them early on, and that seems to make up the bulk of our investor base today. And now that there's such a shift in policy and regulation, we're starting to see a lot more interest around the world from the larger institutions wanting to enter the space. And I think that's what really restricted a lot of them for many years, was that they need the regulations in place to understand the sandbox they're playing in before they just start deploying a ton of capital, because it's a risk that most of those bigger institutions or endowments or foundations are willing to take.
Mm-hmm. And I was doing my due diligences before we had you on the show, and I saw something that said that you've talked about the Bitcoin adoption following an S-curve. Okay, so how does that play into your investment strategy? Are you timing those inflection points? Are you just buying and waiting, or what's your process like there?
Yeah, so our average holding period for an asset is 1 to 3 years. So with the S-curve adoption, for people that may not be familiar with this, and this is big into our investment thesis, is that for a new technology that becomes very innovative and gains mass adoption, generally with S-curve adoption, it takes the same amount of time for this new technology to go from 0 to 10% adoption that it takes to go from 10 to 90% adoption. So this has been true of the printing press, the automobile, the internet, mobile computing. And as an example, if it took 8 years to go from 0 to 10% adoption, it probably took around 8 years to go from 10 to 90% adoption. Or if it took 10 years for the first, 0 to 10, it probably took about 10 years for the second 10 to 90%. And that's what we believe is going to happen with Bitcoin that's playing out. So we think that, if you keep following the adoption trend, we're very close to hitting this tipping point where we're going to go from, smaller adoption to a dramatically large adoption very quick. And our thesis is that, when we started the company, is that we thought by around 2030, we would be huge up that adoption curve. Like we would be growing very, very quick. And so we think now, for people that haven't entered the space and are interested in allocating to the blockchain space, this is a really great time to be considering it. And the reason for that is now we have a favorable administration for the cryptocurrency sector. We have both the main regulators, SEC and the CFTC, that have crypto favorable leads. It's just chairmen that are leading the charge and really putting the right guardrails in place in a very conscious and intentional way, which is going to be very helpful for the industry. We have massive institutional on-ramps today that we didn't have years ago, and we have brand new products and services being offered that create a much better consumer and investor protections. And with all those at one, it's just going to create a dramatic accelerance of the adoption rate, in my opinion, between now and 2030. And so this is a great time to be considering getting exposure to the space because we could see some very interesting things happen in the years to come.
Yeah, especially with what you mentioned, we have a pro-crypto Bitcoin government in place right now. So that begs the question for me, how big a role does regulation play in your decision making? If Congress dropped a curveball law tomorrow, what goes on inside of your office? Is it still we're still going on the same track, or would you be trying to adjust quickly? How does that play out for you guys?
I think after what we went through with the last administration and how hostile they were towards the entire cryptocurrency industry, I mean, nothing would surprise me at this point because we've seen a lot of very interesting things happen. But I think we kind of reached over the obstacle. Now we're at a point where even if something comes out of left field, I mean, anything's possible, but I think we have too much momentum at this point to have anything totally devastating to the industry. But, crazier things have happened, so I say anything's possible. However, I do think we've got a lot of steam behind the industry. We went from basically huge headwinds to massive tailwinds over just this year, right? To think that you would have a president not only buying Bitcoin, but endorsing it. I mean, Bitcoin was the first asset I think a president has endorsed in over 50 years. That's a huge deal that people don't really think about. And have a Bitcoin strategic reserve and the early inceptions of that being put in place, along with all the other interesting things that are happening in terms of regulation and institutional on-ramps. I just think it's at a point where, everyone says a new technology is like there's a time when its time has come. And I think that's what we're going to be seeing now. Finally, we've reached this point where the time has come. It's really overcome a lot of the challenging obstacles. And that's just going to open the floodgates for capital and opportunity in the years to come.
Yeah, absolutely. And with those tailwinds you mentioned, it certainly seems like things are trending very much in the right direction despite the recent pullback we've seen. I know you got to get going here, Brian. Before we let you go, though, we like to ask everyone at the end of our show, we're keeping track. By the end of 2025, where do you think Bitcoin is at? This is not any kind of financial advice. We just like hearing it from different experts and professionals in the industry. And whoever gets closest, we're going to send a Roxom Patagonia to. So what do you think, if you had to put a number by the end of this year, where do you think Bitcoin's headed?
So to answer this question, I usually like to refer to the models that we use to help us understand Bitcoin. And we publish these publicly on our website. If you just go to offthechaincapital.com in our charts section, we update these every month. So when we ran the models for this just this month in August, for basic trend line analysis, which basically what you do is you take the historical price of Bitcoin and you map it out on a trend line into the future. That particular model says that Bitcoin, as of this month, should be around $250,000 today. And it has an 88% correlation to the historical price of Bitcoin. So according to that model, Bitcoin, as of today, is very undervalued. Another one that we use is called Metcalfe's law. So Metcalfe's law, you take the number of users in a network. So this can be applied to things like Instagram or Netflix, any network effects type business model. Bitcoin is one of these. And you take the number of users in the network, you square that, and then you multiply it by the transactional value flowing through the network. And this particular model for Metcalfe's law notes that Bitcoin's fair value as of today should be around 173,000, and we know it's trading around 108 to 110. So this model also shows us that Bitcoin is very undervalued. Two other models that we use is, Plan B stock to flow model. So we use it in dollars, and we also take out dollars and use it in gold, as gold is the unit of account. So from a dollar standpoint, this model says that Bitcoin should be reaching, 5 to 800,000 during this particular cycle, which could be, tremendous upgrowth if this ends up happening. And if you look at Plan B's model, 3 of the last 4 times, it actually went 2 standard deviations higher than what the model indicated. So if it went 2 standard deviations higher than the 5 to 800,000 that the model's indicating, that's a significant Bitcoin price. And the gold model for Plan B's models for stock to flow is doing a very similar thing as well. It's showing that Bitcoin should be worth significantly more than where it's sitting at today. And so just taking those into consideration, whether that happens by year end or whether that extends into Q1 of 2026, we have yet to see. But I think people often forget when they're doing analysis on Bitcoin. Look how fast we went from 80 to 90,000 to 124,000. It went up so fast. That's what Bitcoin does, right? If you look historically, most of Bitcoin's performance every year happens in 10 days or less. And if you're not exposed to the space and you miss those 10 days, most of the time you have a negative return. So what this teaches us is this is an asset where you always need to be exposed to it, because if you're not, you may miss those 10 days or less each year, which generate all the performance generally. And so that goes to say that, this year we've had some great days of performance, but I would not be surprised if Bitcoin is significantly higher by year end than where it's standing at today.
Okay. I love the whole breakdown of those. That's a lot of factors to consider. But just so I can get you that Patagonia, if you're right, if you had to put a number, I know you have a lot of different charts and analysis and display. What would be your gut instinct if you just had to put a number on it, like we're on The Price is Right?
I think Bitcoin has the potential to be over 180 to 200 by year end. That range, probably something like that. And it doesn't mean it's going to stop there. I think Bitcoin could go significantly higher into Q1. And a lot of people will always say, oh, it goes through the historical halving cycles, which is true. We've seen that all throughout time where Bitcoin goes through this 12 to 18 month period post halving. And, then it has this drawdown, the 70, 90% drawdown. What I do think is interesting is that this particular market cycle, what is in place that has never been in place before is a lot of the things we discussed during our session today, which is the new policy, the pro-crypto administration, the institutional on-ramps, a flurry of these treasury companies, which is opening up a brand new pool of capital to get exposure to crypto that's never touched it before. And it's not just in the US, it's all around the world this is opening up. I mean, we're funding Bitcoin treasury companies in a variety of countries around the world. And so that just even further accelerates exposure of capital and adoption to this, which can then contribute to price. Because when these Bitcoin treasury companies bring cash in, whether issuing debt or equity, they're using most of that cash to go buy Bitcoin. And it's important to remember that the Bitcoin network, I believe, is producing around 164,200 Bitcoin approximately per year. And Strategy alone is buying more than that. So if Strategy is buying more than that, and you have all these other Bitcoin treasury companies that are buying more Bitcoin or all around the world, I mean, there's going to be a massive supply crunch at some point, and I think we'll just see a huge uptick in price.
Yeah, it seems like an inevitability at this point, so I got to say I agree with you, and I certainly hope so, because I'm really got to put the down payment on my helicopter, but soon enough. All right, Brian, I know you got to get going. Before we let you go, though, I'm sure there's plenty of people in our audience that are interested in learning more about you and everything that you and the team at Off the Chain Capital are doing. What's the best place I can send them to get more info?
Yeah, just the website is great, offthechain.capital, or from an X perspective, my handle is BRIAN DIXON06.
Beautiful. Oh, Brian, thank you so much for joining us in the Blockchain Report today. It was an absolute pleasure, and I hope you have an amazing weekend, my friend.
All right, thank you. Thanks so much for having me on. I appreciate it. Take care.
Pleasure's mine. You too. Take care. Cheers. All right, we're going to take a break, but when we're back, more of today's top stories right here on the Blockchain Report. Stay tuned. We'll be back after this.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
All right, welcome back. It's time for a little Blockchain Without Borders, where we see what's going on with the rest of the world. Really quick, though, another thanks to BRIAN DIXON from Off the Chain Capital for joining us today and sharing his many insights with us. He's very informed. Go check them out, Off the Chain Capital. You can find him on the interwebs. All right, well, let's talk about what's going on in South Korea, because they are officially in the corporate Bitcoin game. A rebranded firm called BitPlanet, formerly SGA, just dropped $40 million into a Bitcoin treasury of its own. That makes them the first South Korean company to hold Bitcoin on their balance sheet at this scale. Now, Asia Strategy Partners, now their largest shareholder, pushed the rebrand, and the move signals a pivot straight into blockchain finance. It's not just diversification, it's a bet on Bitcoin as a strategic hedge. Analysts say it could inspire other South Korean firms to follow suit. Japan's Metaplanet's already jumped in. Korea's K-Wave Media is stacking too. And now BitPlanet sets the tone in Seoul. Challenges remain as regulators in Korea are still cautious, and Bitcoin volatility will test every CFO's blood pressure, as we know. But the symbolism here is huge. South Korea now has its first corporate Bitcoin treasury, with $40 million locked up, backed by big investors, and watched closely by everyone in Asia. Now, if it works, they're a model for others to follow suit. If it fails, at least they didn't buy Ethereum. Am I right? Yeah, I'm right. Oh, in Japan, land of sushi, anime, Godzilla, and apparently endless patience, may have to wait until spring of 2027 to get a Bitcoin ETF of their own. That's the timeline, according to Kenji Hoki, the head of KPMG, Japan's Web3 and FinTech department, who dropped the news at the WebEx 2025 summit in Tokyo. The session was literally called a Japanese Bitcoin ETF, feasibility and issues to be solved, which should tell you everything you need to know about how far away this thing is actually from happening. Here's how it works. Japan's regulators typically submit tax reform requests at the start of each calendar year. So if policymakers include a request to lift the ban on Bitcoin ETFs in early of 2026, the National Diet could maybe vote it into law by March or April of that year, which means the law wouldn't take effect until spring of 2027. Because in Japan, even if you move fast, you move slow. Now, Hoki did add that if the government really wanted to, it could fast track the whole thing. All it would take is a simple government ordinance amendment instead of a full-on legislation. Now, if that happens, the ban could be lifted as early as next year. But here's legal whoa, yikes, yeah. Legal obstacles, and there are some big ones. The Investment Trust Act doesn't currently allow ETFs to buy crypto directly. Supervisory guidelines block it, in fact. And apparently, the industry can't even agree with itself because advocates have made little progress in harmonizing opinions. Meanwhile, Tomoya Asakura, the president and CEO of SBI Global Asset Management, basically told the entire room, "We're getting left in the dust here, guys." He said, quote, "The earliest we can expect approval is 2 years from now. But that is still too late. The U.S. market has been moving very quickly over the past 6 months. In a year's time, we can also expect to be significantly behind Hong Kong and Singapore." In other words, while Tokyo debates what to call a working group, the rest of the world is busy eating its crypto lunch for them. Now, Asakura added that Japan has already said it wants to turn crypto into financial products to help citizens build wealth. The problem is the timeline, because apparently nobody in government has figured out that ETFs require an actual deadline. One realistic workaround, Asakura pitched, let Japanese investors buy U.S. Bitcoin ETFs and wrap them inside local investment trusts. Basically, rebrand an American ETF with Japanese packaging. Now, if all it takes is tweaking supervisory guidelines, that could be the fastest path there. And guess what? Investors want it. Hajime Akita, executive officer of Nomura Holdings, pointed out survey data showing that over 60% of Japanese investors already want exposure to crypto in some form or another. Or in other words, retail is saying, "Give us Bitcoin," while regulators are saying, "Maybe, but in 2027. Even Japan's finance minister Katsunobu Kato admitted crypto could become part of Tokyo's diversified investments. He also warned that volatility risks remain, which is bureaucratic code for "we're scared of Bitcoin's mood swings." I get it. But he did concede that if the government builds an appropriate investment environment, those risks could be managed. So here's the situation. Demand is rising, the finance minister is on board, Nomura says investors are hungry, and SBI says Tokyo is losing ground to the United States, Singapore, and Hong Kong. And yet, unless regulators suddenly decide to act like it's 2025 and not 1995, Japan won't see its first Bitcoin ETF until 2027. Which means by the time Japan lists its first Bitcoin ETF, the rest of the world might already be trading space ETFs on Mars. Can't wait for those. All right, it's time for a little AIO. Let's run the stinger and see what the robots are up to. Play it, guys. All right. right, time for a little AIO. This is the part of the show where we see what's going on with that whole artificial intelligence thing all the kids are talking about. Most recently, Anthropic dropped a new report, and it reads kind of like a Black Mirror episode written by hackers. Great. According to the report, criminals are now using AI to run attacks in real time with Bitcoin as the payment rails. The headline act is something called vibe hacking, which sounds like a bad self-help book, but is actually cyber criminals using Anthropic's Claude Code, a coding assistant, to launch mass extortion campaigns. Also, just great. Now, one attacker used Claude to hit at least 17 organizations across government, healthcare, and even religious institutions. Now, instead of hiring a hacking crew, the guy basically had Claude just do everything for him. It scanned VPN endpoints, it wrote custom malware, harvested credentials, and analyzed stolen data to figure out which victims could pay the most. Claude even drafted personalized ransom notes in HTML, complete with financials, employee counts, and legal threats. The price tag? Between $75,000 and $500,000 in Bitcoin. So, yeah, one person plus AI now equals the firepower of an entire cyber gang. And that's just the start. The report also says North Korean operatives are faking technical skills with AI to land jobs at Western tech firms. They use Claude to write resumes, answer interview questions, debug code, and even compose emails. Basically, fake it till you make it, but instead of becoming a better employee, you're funneling millions into a weapons program. The FBI says North Korea's AI job scam alone is worth hundreds of millions of dollars a year. Meanwhile, the dark web now has its own ransomware Costco. A UK operator named GTG-5004 is selling AI-built ransomware kits for $400 or $1,200 if you want the executive membership bundle. What used to take elite hackers now takes a stolen Visa card and a Wi-Fi signal to complete. Great. And of course, it's all paid for in crypto. Of course it is. Now, China's in on it too, using Claude in 12 of 14 attack stages against Vietnam's infrastructure. North Korea's malware campaign? Anthropic says it auto-blocked one before launch, and even AI thought, yeah, this guy's just a really bad idea, don't do it. And scams, well, they're branching out too. There's now a Telegram bot marketed for romance scams, literally billed as high EQ model to write breakup texts that can make you cry in over 2 languages. It had 10,000 users just last month alone. My friends, that is not a cybercrime, that's Tinder Premium, or so I'm told. Now, the moral of the story here is ransomware is now software as a service. One guy with an AI subscription can play Ocean's 11 from his mom's basement. Welcome to vibe hacking, my friends, where the only thing getting hacked faster than your data is your dignity. All right, we're taking a break. When we're back, more of today's top news stories, so stay tuned. Blockchain Report will be back right after this.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the center of the planet moved to Wall Street. Today, we're traveling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
All right, let's revisit how the numbers are looking in our market rundown this morning. So right now, it's a bit of a bloodbath all around. Even right now, we got Solana down about 3% to 209. We have Ethereum down almost a little over 6% itself today. We had it hovering near all-time highs of around 4,900. It felt like just a couple of days ago, but we have cratered all the way back to beneath 4,300 a coin. And then, of course, we have Bitcoin not faring the best itself, currently down about 4% in the last 24 hours. Currently hovering above that 108 mark. We could definitely see some downside risk if we go too much further. Obviously, that $100,000 mark is a big psychological barrier. So hopefully that will be the absolute floor of floors that we'll be seeing. But we'll have to wait how this plays out. Usually the low closes toward the end of the week do tend to signal not a lot of strength going on forward. So we could be in for some further downside risk. Let's take a look here. In the last 24 hours, we've had Bitcoin as high as the high 112s, as low as our current price now, actually the low 108. So that number's got to get updated. Current market cap still over $2 trillion. So everything is fine. Everybody's going to be just fine. All-time highs still over that 124K mark that we saw just about 2 weeks ago. So remember, as quickly as Bitcoin can move down, we've seen it move up just as fast. So a lot to be optimistic about here. And that was back on August 14th. Let's take a peek at how things are looking in the TradFi space this morning. Let's see if the streets are running blood red with the blood of the infidels, or if they're doing a little better. Right now, they're doing a little better. Currently, the Dow Jones is sitting at over $45,000. We have the S&P 5 just below that $6,500 mark. NASDAQ Composite hanging pretty good around 21,400. And MicroStrategy, as we know, it usually goes where Bitcoin goes, but not a huge drop, less than 1% considering we've seen Bitcoin come back about 4% in just the last 24 hours. So Michael Saylor seems to be steadying the ship just fine. All right, let's go. We got more stories today for our bull run, so let's run the stinger, head back to the desk. All right, it's time for more bull run. We got to go over the rest of today's top stories. And this next one, this is going to be a divisive one because Ethereum's fan club, well, they're back at it. And this time they're claiming ETH could overtake Bitcoin within just 1 or 2 market cycles. Fighting words if I've ever heard them. Right now, Ethereum's market cap is about a quarter of the size of Bitcoin's, but Trend Research, which is basically Ethereum's version of Don King, but with spreadsheets, says treasury firms and ETFs are buying ETH so aggressively that it could actually leapfrog Bitcoin. Here's their pitch, okay? Bitcoin is capped at 21 million. We know that. It's scarce. That's kind of the whole shtick, right? Ethereum, on the other hand, not only gets bought, it also pays a yield. You stake it, you lend it, you play DeFi games with it, and suddenly your ETH makes more ETH. Sounds good. Institutions love that because they can slap cash flow models on it and tell their board, see, it's an asset. It's an asset with income. Gotta love it, right? Well, since the Pectra upgrade in May, daily unstaking is capped at 57,600 ETH. Institutions are buying way more than that, meaning demand is beating supply. Bitmine alone scooped up 1.5 million ETH since July. SharpLink added 740,000. BlackRock's ETHA ETF holds nearly 3% of the entire supply. Meanwhile, whales are bailing on Bitcoin and parking themselves into ETH. Futures trading volume for Ethereum went from 35% in May to 68% in August. Some staked more ETH than the Ethereum Foundation itself owns. Now, Trend Research calls this the cash flow premium, or in other words, ETH prints yield, Bitcoin doesn't. In the short term, ETH looks shaky. Analysts see it wobbling between that $4,300 to $4,900 mark, with momentum already starting to fade like a New Year's resolution in February. Long term, though, the hype machine is certainly strong. Whales are rotating in, ETFs are piling on, and the U.S. policy is giving Ethereum a wink and a nod thanks to stablecoins running on its rails. So, could Ethereum actually flip Bitcoin? Maybe. In the near term, it's still pretty volatile. Longer term, institutional demand, ETFs, and stablecoin policy give it some momentum. But for now, Bitcoin, we know, remains the leader in the space, and Ethereum is still trying to close the gap. For now. All right, our good friend of the program, Samson Mao, he's back at it as Bitcoin's resident maximalist and part-time prophet. He's saying Bitcoin won't see its next big leg up until one thing happens. And that is Ethereum finally eating the pavement. Uh-oh. According to Mao, Ethereum is nearing the end of its current rise. Once it inevitably resumes its long-term habit of underperforming Bitcoin, the real Bitcoin bull run begins. His take is actually quite simple. Bitcoin's dominance matters. If altcoins like Ethereum keep stealing the spotlight, Bitcoin won't explode the way that it should. So for anyone waiting on liftoff, keep your eyes on those ETH charts, okay? The second it stumbles, Bitcoin's engines begin to light back up. Now, this isn't a one-off opinion, though, either. Mao has long contrasted Bitcoin strategies against altcoin gambling, hammering the point that timing and broader market forces matter far more than whatever Ethereum developers are currently cooking up. He's also made it clear that Bitcoin isn't just about price. He's been pushing privacy solutions like Dolphin Card because nothing screams serious advocate like promoting a Bitcoin debit card named after Flipper. Bottom line here, Mao's betting Ethereum goes down, Bitcoin goes up. It's the circle of crypto life, so Hakuna Matata for Bitcoin holders everywhere. You guys will be fine. And Griffin Digital Mining stock, I don't know if you've heard of them, you might. Well, they've gone vertical. They're up 231% since May, and the reason is peak 2025 absurdity. It's merging with, of course, American Bitcoin. Yes, that American Bitcoin, the one co-founded by Eric Trump and Donald Trump Jr. I feel like Kid Rock's got to have a part in that somehow. Now, shares popped another 42% for Griffin on Thursday, hitting $1.75. And Reuters says the merger will be finalized in September with the new company keeping the name American Bitcoin. Ownership? 98% in the hands of Trump and Hut 8. So if you ever wanted a family-run mining company where the family name is literally Trump, congratulations, it exists now. Anchor investors include Cameron and Tyler Winklevoss. So now we've got the Trump brothers and the Winklevoss twins in one company. All we need is Elon Musk tweeting about it, and the Avengers lineup is finally complete. Now, American Bitcoin has been quietly stacking coins into a corporate treasury. They've also bought mining rigs and are looking at an acquisition in Asia. Meanwhile, U.S. crypto IPOs are booming. Circle went public in June and soared 167% in a single day. Bullish went public in August and jumped 218%. Gemini and Kraken are rumored to be the next up. And all of this is happening under Trump's new crypto-friendly playbook. In March, he dropped a national Bitcoin reserve. And then in July, Trump signed the Genius Act to regulate stablecoins. Now, the fallout, crypto stocks are ripping, American Bitcoin is going public, and Griffin's up 231%. And whether you call it a bull run or a circus, the tent's packed and the market's certainly booming. And Sequans Communications, a NASDAQ-listed semiconductor firm, has decided that making chips just wasn't spicy enough. So they've announced a $200 million at-the-market equity program, and every penny is earmarked to buy Bitcoin. Forget new factories or research and development. The plan is really simple. Sell stock and then stack Satoshis. Sequans already holds over 3,000 Bitcoin as of July of 2025. Now they're looking to expand their bag like Michael Saylor on a shopping spree. The ATM equity program lets them raise capital slowly, selling shares bit by bit. It avoids the panic of a big secondary offering and minimizes dilution. Basically, they're drip feeding the market stock so they can quietly siphon cash into Bitcoin without freaking out the shareholders. Now, by allocating capital this way, Sequans is saying the quiet part out loud. Bitcoin isn't a gamble anymore. It is, in fact, a long-term strategy. They're treating Bitcoin like a store of value and a hedge against inflation, not just a line-go-up meme asset. Now, this lines up with a broader trend that we're seeing. Corporations are diversifying reserves beyond bonds and cash, and digital assets are becoming the shiny new thing in the Treasury toolbox. It also screams institutions trust Bitcoin. Sequans is following the path blazed by other public companies, parking big money in BTC instead of watching it melt away in fiat. But, and there's always a but, Bitcoin is volatile. The value could swing wildly and hit their balance sheet like a wrecking ball. Plus, regulators are still making up rules on the fly, so the future isn't exactly stable. Sequans, though, seems unbothered. They've decided that the upside is certainly worth it. And if more NASDAQ firms copy them, Bitcoin's reputation as a real financial instrument goes from meme to mainstream. So while Sequans makes semiconductors, they're also making a statement. The future balance sheet runs on Bitcoin. And JP Morgan, well, they've decided Bitcoin isn't a scam anymore. Awesome. They're actually saying it's a bargain bin special. You see, the bank's analysts say that Bitcoin is undervalued by about $16,000 at current prices and should really be trading around that 126K mark, which is kind of Wall Street's way of saying we'd like to buy cheap coins before everyone else does. So why is JP Morgan so bullish about all this all of a sudden? Well, because Bitcoin's volatility fell off an absolute cliff this year. 6 months ago, it was whipping around at nearly 60%. Now it's crawling around nearly at 30%. That's the lowest level it's ever been. So in Bitcoin terms, that's like going from snorting Red Bull to sipping chamomile tea. Institutions, of course, love boring. They don't want roller coasters. They want spreadsheets that don't trigger PTSD. JP Morgan says if Bitcoin stays this chill, pension funds could start allocating like it's gold. Let's break down the math here, shall we? So Bitcoin's market cap only needs to rise about 13% to match gold's $5 trillion private investment market. That's it. A tiny nudge, really. And suddenly your magic internet money is sitting next to Grandpa's Krugerrands. So what calmed the old Bitcoin beast? Pretty simple. Corporate treasuries. We're seeing it all the time, right? They've been gobbling up more than 6% of the total Bitcoin supply and locking it away. Strategy is hoarding over 632,000 Bitcoin like Gollum with a Bloomberg terminal. Adam Back's crew is racing to catch up, and Kindly MD, a healthcare company, is trying to raise $5 billion to buy Bitcoin. So in 2025, the future of sound money apparently hinges on stoners with a NASDAQ listing. They always said stoners because they apparently dabble in cannabis too. So index funds are being dragged into. Strategy got shoved into major benchmarks, forcing boomer retirement accounts to own Bitcoin, whether they like it or not. Metapanic climbed into the FTSE All-World Index because why not let Tokyo pump your 401k too? Meanwhile, JP Morgan notes the volatility ratio of Bitcoin to gold is now 2.0, the lowest ever. And that means portfolio managers can finally pitch Bitcoin at client dinners without ordering a third martini first. And here's the kicker. At the end of 2024, Bitcoin was $36,000 above JP Morgan's so-called fair value. Now it's $13,000 below it, which either means their models are absolute trash or Bitcoin's about to rip faces off again. So yeah, after years of calling it rat poison, Wall Street now says Bitcoin is calm, underpriced, and ready for institutions. And do you remember when crypto ATMs were supposed to be a sign of adoption? Those were weird. Well, now they're basically being treated like drug dealers on every street corner. The FBI says that crypto kiosks are increasingly used for fraud, with $246 million worth of scam complaints alone in 2024. You see, cities like Stillwater, Minnesota, and Spokane, Washington have banned them outright after senior citizens were conned into feeding thousands into machines for fake PayPal refunds and romance scams. States are now jumping on the bandwagon as well. Arkansas now caps new users at $2,000 a day and requires ID. Seems fair. Colorado forces operators to refund transactions if funds go offshore. Iowa went full scorched earth, suing Bitcoin Depot and CoinFlip while capping fees at 15%. Maine and Maryland passed laws mandating refunds, transaction limits, and strict licensing. Nebraska and North Dakota added reporting requirements and even quarterly disclosures. Even Oklahoma overrode a governor's veto to pass its own restrictions. And Wisconsin's new bill forces operators to collect KYC data like names, addresses, and birthdays. All of these laws have one thing in common, and that's that regulators say the machines are too easy for scammers to exploit, especially targeting senior citizens. Big surprise there. And yeah, the vast majority of reported fraud has been directed at people over 60 years old. Now, the crackdown is spreading and fast, and Washington is already considering a federal bill to regulate them nationwide. So what does this actually mean? Well, crypto ATMs, once hyped as a grassroots on-ramp for adoption, are being strangled by rules, caps, and lawsuits. Between the fees, ID checks, and refund guarantees, the business model may not even survive. Which means if you want Bitcoin, maybe don't go to the shady kiosk at a gas station. Go to an exchange, or better yet, mine a block solo in your basement, and you can make $371,000 like those guys did this year. Happened like 4 times.
Oh, give me a second, Hank. I'm hearing myself.
Yeah, what's up? There he is. Yeah, what's up, big? Oh, wow, it's like going in.
All right, I had a question for you, Hank.
Yeah, what's up?
Did you ever get to use these ATMs?
No, they always seem shady. Like I've seen these before, but they somehow always seem to find their way to like a corner or like
Right?
the entrance of a men's bathroom
I see.
or something. Like I
I feel like
wouldn't
people,
touch
who are not familiar with Bitcoin, when they think about Bitcoin, or at least when I did before I was, orange pilled, I thought about those
Yeah.
ATMs, and I was like, they always seem like a scam.
Yeah, and like, do I have a date? Do I gotta bring? I guess I have to bring like my cold wallet with me and like stick it in there. Like it just seems impractical unless it's like raining out shiny bitcoins like a slot machine, which we know it's not. Like I
Right.
don't fully understand it, frankly. I don't even like using regular ATMs.
Yeah, I know, same. What do you think about like, these senior citizens? Like, I think about my parents, and like they don't use it. They don't even use the internet other than like scroll on TikTok and Facebook. But if I want to orange pill
Yeah.
them, it's kind of hard for them to use, apps like, Robinhood or whatnot to buy Bitcoin. So like, how do they start?
How do you get them on board?
Yeah.
That's a great question.
'Cause
I mean,
many of
I
these
tell my
older
parents
citizens
not even
use the
click on links and
ATMs.
emails. Right. Well, I think the ATMs are just the wrong way
No, yeah, I
to be
agree.
getting involved because, right, like ATMs, people get mugged at ATMs all the time, and the last thing I need to be doing is like putting Bitcoin in ATMs so someone can snag my cold wallet out of my hands. That's a lot more
Right.
than probably any cash I'd be carrying around anyway. I think the way to get people involved, and I hate to say it because it's against the not your keys, not your coin thing. I think Robinhood's a really easy way to get your family who is orange pilled, who hasn't got exposure to it yet. There's that whole gamification thing. It does have a really nice interface, and you can just look at it. My dad checks it. I got him into Bitcoin, and he was checking it all the day, and he was always like, Bitcoin's up to 31K now, and this is years ago, So I think like you got to make it easy for the 60 and over crowd because like it's not easy even if you're 20 and you're getting introduced into this space, right? Like the big wallet addresses and stuff, it's easy to send things into the abyss and never get them back. So I say stay away from the ATMs, but I have the blanket statement, even the regular ATMs, stay away from those. They're trouble. I don't like them.
Yeah, too many fees. For sure.
Too many fees too, yeah. They're always killing you. They're saying there's like 15% fees. They were capping the fees on some of these. Like that's no way to live, guys. That's predatory. And it's the older crowd that often falls victim to those predatory scams, unfortunately, So,
Yeah.
between all the links you're getting sent and emailed and texted, mom, dad, stay away from that stuff. I'll help you. Get away. Leave.
Alrighty, Hank, let's go to a
I think
break.
we can take a quick break. Yeah. All right, we're going to take a quick break. We'll be back. More Blockchain Report after this.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
All right, we're back. Okay, so one thing we really like to take note of on this show is, if you've followed us at all before, Michael Saylor is always posting the most hilarious AI-created memes regarding himself and Bitcoin. So, Victor, looks like you've got our most recent iteration of this up there. What are you seeing right now?
Yeah, looks like he tweeted this out 8 hours ago. It's like saying the future is orange.
Is this like a Dune thing, or maybe like a Star Wars type vision? It usually has like a theme, you know?
Yeah, it looks like Dune, but you know what it reminded me of? What's that movie with Ryan Gosling that he did a couple of years ago? It was a sequel.
Blade Runner.
Blade Runner, yes, that's what it reminded me of.
It does have some Blade Runner vibes. Let me ask you this, Victor. Seeing that Michael Saylor is kind of the high priest of Bitcoin right now, I mean, the biggest talking head in the space, do you think these types of kind of silly AI-generated memes help people take him seriously? Or do they detract from people take him seriously? Or do they kind of help humanize him? They're like, at least he's got a funny sense of humor about himself.
I think it helps him humanize him, you know? Like he's just being funny and kind of relatable, I guess.
Yeah, like his last one that had the giant like grizzly bear and he was walking away from it and it was like, don't believe the bears or something.
Yeah.
Like, they're incredible.
Yeah,
I'm really waiting for, go ahead.
And no, I think they're funny and they're engaging. And I mean, look at some of the comments.
What I want us to do, I think Roxom needs to commission having like a giant quilt made, and each like square of the quilt is a different one of these AI memes that Michael Saylor has produced for himself, and then we send him the quilt. I think that would make a pretty badass quilt. Put your thoughts in the comments, but I think he'd like it. He'd probably retweet it, him holding up in it, maybe cloaked in it. Who knows?
He's
But
definitely
I'm
obsessed.
here for it. I think we need to start.
Oh, this
we
is
need
a
to start,
comment.
this
I don't know what this.
segment.
Yes.
Oh, what is this? Michael Saylor in
orange
jail.
suit,
I don't
yeah.
think he did that one. Is that like a Shawshank Redemption one?
Well,
maybe,
he
or
didn't
these
post
user
this.
created?
So,
Oh, he didn't. Okay.
No,
So
somebody
fans are
commented
getting
on
it.
this.
Oh, what did incredible. I think we said we have some stuff going on the Roxom page as well.
Oh yeah,
What
they
were
actually
you
tweeted
telling me
something
about?
out that we're about to cover.
Oh, let's see. What do we got here? Oh, the Killing Satoshi movie. Pete Davidson and the other Affleck, as I call him.
The other Affleck, you know, he got
Yeah.
canceled. I don't remember what it was for, but after he won his Oscar, I think he was like toxic on set or something.
Oh, that's why he'll always be the other Affleck. And then Pete Davidson, though, makes me immediately not take whatever this movie is seriously at all. I can't do Pete Davidson as an actor. I can't buy into it. Are you cool with him in this?
I don't dislike him. I don't think he's a great actor. But I think he has a really good agent. And
Yeah, he does have a good agent.
but we'll
He's
see.
good at roasts. I'll give him that. I like him.
Yeah,
at
we'll
roasts.
have to
we'll
see the movie. Like, I don't want to judge, but I mean, he would have been my first choice. But also, I don't know what type of movie this is going to be. So maybe we should talk about it.
Yeah, I think we probably should talk about it. Killing Satoshi is a good name. So, yeah. All right, let's talk about it. Let's. Do we got a stinger to roll? All right, we're back with Little Tales from Hollywood. As you saw before, there is a new movie coming out called Killing Satoshi, because nothing says mainstream adoption quite like Pete Davidson playing in a conspiracy thriller about Bitcoin's mysterious founder. Now, the director, Doug Lehman, who's the guy behind the Bourne Identity and Mr. and Mrs. Smith, will be taking the helm and has signed on to direct Killing Satoshi. It's a film about a shadowy cabal trying to erase the truth about who Satoshi Nakamoto truly is. Yes, the mystery of Bitcoin's creator is now a $200 million popcorn thriller. The screenplay comes from Nick Shank. This is the guy who wrote the Gran Torino movie and The Mule. Instead of Clint Eastwood scowling at millennials, this time we'll get Casey Affleck, the other Affleck, and Pete Davidson fighting the global powers who want Satoshi buried. Literally or figuratively, well, that part's a little unclear right now. So filming kicks off in London this October with a release date of sometime next year. which means we are 2 years away from Bitcoin officially getting the Hollywood treatment it's always deserved. Here's the setup, okay? Satoshi minted roughly 1 million Bitcoin in the early years. That pile is worth about $64 billion today, making him, if alive, one of the wealthiest people on the planet. I don't think those numbers are right. I think he'd be worth a lot more than $64 billion. And since none of those coins have ever moved, the legend of Satoshi only grows. And to Bitcoiners, Satoshi is a hero who gave people sovereignty over money. Now to governments, he's a destabilizing threat who broke their financial monopoly. To Hollywood, he's the box office digital gold. Now producer Ryan Kavanaugh, who financed The Social Network, says this could do for Bitcoin what that movie did for Facebook. So expect at least one dramatic monologue about decentralization, followed by Pete Davidson making a dick joke. Now, according to Lehman himself, the film is about unlikely anti-heroes taking on the most powerful people on the planet in a battle over what money really is. Translation, Casey Affleck and Pete Davidson versus the IMF. Good luck with that, guys. Now, Hollywood, as we know, loves a David versus Goliath story. This time, David has a ledger wallet and Goliath is the Federal Reserve. And honestly, I think I'm totally here for it. Victor, are you here for this movie? You are a resident cinephile. What do you think?
Yeah, it seems interesting. It just depends how they play it out. Like a thriller, I guess.
Yeah.
I'll have to see a trailer. Let's put it at that.
Yeah. I'd feel better if it was written by Zorkin or something.
Yeah.
And
So-
I'm having a hard time getting past Davidson.
So I looked up Doug Liman, which I believe you said it was the director of the movie. I was looking at his other movies, and out of like the list here, I've only seen Edge of Tomorrow, which was pretty good.
Edge of Tomorrow is incredible.
Yeah.
Oh, man.
I don't remember much of it, but I remember I liked it.
Edge of Tomorrow, dude, that's like an unsung gem. It's like Groundhog Day meets Future Wars of some kind. It's fantastic.
Also The Bourne Identity, which I haven't seen that franchise at all.
That's a good franchise.
So, I mean, he did the Roadhouse remake,
Oh, really bad. No, that was horrible.
American Made, Mr. and Mrs. Smith,
Okay, it was okay. Okay,
So
it's
it's-
got some good credits.
Jumper, which I heard was really bad. So
Yeah,
it's like
whatever.
a mixed bag, you know? So, but you kind of get the vibe of what the movie's gonna look like. I think it's kind of like
Okay.
action-y, thrilly, but not really serious like a Social Network.
Yeah, I mean, again, Pete Davidson just kind of changes. Him and Casey Affleck are a weird pairing because Casey Affleck seems more of like I'm an actor like type, right? And
Yeah.
Pete Davidson, again, dick jokes, bad tats, you know.
But also,
seems to
like-
be his bag.
I mean, Casey Affleck, at least in my understanding, I don't think he's been getting a lot of work since, like I said, I don't remember what he got
You said he
canceled
got
for,
canceled?
but yeah. After he won his Oscar, it was just kind of like,
Well, I hope it's great. I hope it's an awesome movie because it's like, you know, anything that puts Bitcoin into the national headlines, it's the kind of thing where, you know, any kind of publicity is good publicity. So I hope it's good.
yeah.
If they're spending $200 million on it, like pretty good budget too.
Yeah, I wonder how much Pete Davidson is getting paid for it.
Yeah, I really hope they're not like having him play Satoshi or something, in which case Bitcoin's credibility will go out the window. They're like, this guy invented Bitcoin? Like, we got to sell.
Yeah.
So I'm a little nervous about that.
It'd be interesting to ask this director what he thinks about Bitcoin. If he's, you know, I don't know.
They need some good marketing gimmicks, like you can pay for movie tickets discounted in Bitcoin or something. Like it seems like you would need to. It would be wise to integrate Bitcoin however you can into this. I'm sure the whole BTC crowd would come out in full if you could do that.
Yeah, we
you
should
know.
try to get someone from the movie on the show.
Right, we should. We'll call up. That's another problem too. Ever since Kanye and Pete Davidson got in that, like, what was really just Kanye yelling at him and calling him Skeet. I just think of, I'm like, oh, there's Skeet, and Skeet can't be Satoshi. That won't work.
Didn't that start because he was dating Kim Kardashian, right?
It absolutely did. Yeah, I mean, Kanye was really unraveling in those days. It was great, you know, public theater.
Right.
But
I wonder if
poor Skeet.
Kanye will have any thoughts about this movie.
Kanye's got thoughts on everything. He's a delicate, genius, crazy person. But I love him. But he's also a crazy person. So take the good with the bad.
Let's say I love Kanye before 2015. I think.
Yeah, he's made some real questionable moves as of late. But yeah, I don't know. He's like one of those people. I just think of him as like he's a performance artist all the time, and everything he does is performance art. And I try to look at him through that lens because he does so many insane things. I would probably dislike him if I took him seriously. So, All right, I think it's time for a quick break. What do you think?
Yeah, sounds good.
All right, we're taking a quick break. We'll be back with more Blockchain Report after this.
It runs on Bitcoin. Introducing Roxom, the first ever exchange where Bitcoiners can trade treasury stocks entirely in BTC. Get exposure to top Bitcoin holding companies like MicroStrategy and Metaplanet, priced in Bitcoin from the start. No fiat, no middlemen. This is what financial freedom looks like. Early access now live at roxom.com/treasuries. Built by Bitcoiners for Bitcoiners.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
All right, and we're back. Let's see what's going on the Roxom X page. All right, so right now it looks like we have our most recent post here. Is that Nakamoto? Remember, we talked about them earlier. They were having that merger with Kindly MD, and they just raised a $5 billion at-the-market equity offering, and to actually increase or build this Bitcoin treasury that they're doing, including $679 million, which will be allocated toward Bitcoin acquisitions. And their stockholders don't seem to be loving it right now. Part of the problem here is that it seems like the share dilution that will come with this offering is kind of spooking investors right now, and their share price is certainly seeming to indicate as much. I mean, we're talking 47% down in Bitcoin terms in just this week. So again, this is a bit of an arbitrage play here, one thing for another. So I'm sure they'll be fine, but with Bitcoin kind of settling down price-wise as we've seen this week, we're at 124K all-time highs just about a week and a half, 2 weeks ago. Now we're down to the doldrums around 108K. Investors are feeling a little less confident than we'd seen in the past. But as we know, they are in this for the long-term play. And as we had on the show, who was one of the advisors there, we had Stephen Lubka. They are in good hands. They've got some great captains of that ship, so I think they'll be just fine. Let's see what else is going on the Roxom page here, guys, as we scroll our way down here. And who do we have? Looky, our fearless, or one of our fearless leaders, that's Borja Martel Stewart over in Bitcoin Asia in Hong Kong. What's he doing there? He's talking about Bitcoin treasuries. As you know, or maybe you don't know, Roxom TV has a Bitcoin treasury of its own. So we don't just talk about it, we're living it too, right here at Roxom TV. So we hope them and the whole team is doing great over in Bitcoin Asia, which I believe was yesterday, or 2 days? Was it? Today's Friday, so it was Wednesday and Thursday. So it's probably coming to a close now. Looks like an amazing event though. Wish we were there. Send us next time, guys, please. So that'd be fun. What else we got? And then if you scroll down a little further, you can see a little clip from our recent interview with Stephen Lubka over at Nakamoto. You can go check that out, of course. We always have all of our shows and interviews available on our YouTube page, our Rumble page, and we also post them on X with a lot of frequency as well. So you can always see who we've been chatting with, as we're always getting some of the best and brightest here in the industry to tell us what is going on, what they are up to, and what you can possibly expect from Bitcoin and its price action in both the short and near term. One of our favorites of the program and friends of the program, as you may know, is Mr. Big Beat himself, Stephen Orr, who's always bringing us the heat, usually on Mondays during the show. All right, speaking of which, I think it might be time that we wrap up this week with a little bullish, bearish, or BS and see how things are trending for Bitcoin as we enter into this pivotal weekend. So, guys, let's roll the stinger and hit the camera down. All right, it's time we wrap things up with some bullish, bearish, or BS. We're going to break down today's top news stories and see how they are looking for Bitcoin as we head into the weekend. First up, we had Eric Trump told the Bitcoin Asia conference in Hong Kong that Bitcoin is destined for $1 million a coin, spending 90% of his time in crypto and even joining Metaplanet's board. Eric is feeling very involved and knowledgeable in the space right now, hence the big prediction. The Trump family itself is expanding their crypto empire across Asia while his dad cements pro-Bitcoin policies right here back in the good old US of A. I mean, how can you not be bullish on this, right? When the son of a sitting US president tells the world Bitcoin is going to $1 million, it might sound like some form of reality television, but it actually reinforces the policy direction in Washington and stokes global demand. Asian exposure plus U.S. backing is absolute rocket fuel for long-term upward pressure on price. So a presidential pump, that is bullish news if I've ever heard it. Grab your jetpacks, boys and girls. Feeling good. Next up, we got Trend Research claims that Ethereum staking yields and ETF demand could eventually help ETH leapfrog Bitcoin, with whales shifting and futures volumes doubling. They call it the cash flow premium. ETH pays income, Bitcoin does not. Ooh, I'm going to call BS on this one. Here's why. This is Ethereum's, yeah, yikes. What we're hearing here is this is Ethereum's favorite bedtime story, okay? Because Bitcoin remains the only fixed supply, globally trusted asset. ETH may generate yield, but its volatility, gas fees, and constant upgrades make it more like a tech stock than actual money. It's good for ETH holders in the short term, but it doesn't threaten Bitcoin's dominance as far as I'm concerned. So ETH flippening talk, that equals BS where I come from. So I'm calling BS on that one. Last, we have Anthropic revealed cyber criminals are using AI to automate hacks, extortion, and ransomware, demanding Bitcoin as payment. From Vibe hacking to ransomware Costco memberships, criminals now have enterprise-level firepower with AI subscriptions. Ooh, I don't like this one. This one's very bearish. The criminal use of Bitcoin for ransom always gives regulators an excuse to clamp down harder on things. And while the network itself remains untouchable, the headlines can certainly spook retail investors and invite stricter oversight, creating short-term downward pressure. And I think we're seeing some of that right now. Around that 108K level. And I don't like it either, guys. Don't boo me. I didn't do it. I don't like it. So AI hackers equals bearish for Bitcoin's optics. So, final score today. We got one bullish, one bearish, and one BS, which means today's net result is leaning barely bullish, because the Trump family's political and global expansion of the Bitcoin outweighs the regulatory FUD from AI hackers and the Ethereum hype machine. I'm not buying it. Big picture here, gang. Price catalysts from policy and adoption are stronger than all the noise you're hearing out there, okay? So, we're ending the week on a bullish note. Whew, I was ready to sell it all. Of course I wasn't. Well, that is a wrap for this week's shows, boys and girls. As always, thank you for tuning into the Blockchain Report each and every weekday. Again, we are at 10 a.m. on Mondays alone, 10 a.m. to 12 Pacific time, Tuesdays through Fridays, 8 a.m. to 10 a.m. Pacific time. Before I let you go, as always, please do me and yourself a solid and make sure to like, follow, and subscribe to Roxom TV and me at Hank at Roxom TV on all platforms you choose to waste your time on. And I will see you all you boys and girls, on Monday for more Bitcoin bedlam and crypto curiosities. Thanks for tuning in this week, and I'll see you all Monday.